Welcome back to Trade 360. I'm Diane King Hall. Time now for the big three stocks, three charts, and three trades. Kevin Green will take us through the charts, and here to take us through the trades is Tim Bohen, Chief Technical Trainer at StocksToTrade.com. It is great to be with both of you. Tim, I enjoyed our conversation the last time we had you on. All right, let's talk about the first one on your list. American Eagle's had a lot of shine this week, taking a little bit of a step back today, but that performance yesterday essentially brought its year-to-date performance in line with the S&P 500 in basically like one day. Talk to us about your views on this one.
Well, listen, I hate to, sometimes it can be a little bit of a hot button issue, but I love this kind of Sydney Sweeney idea. I mean, she's kind of the biggest thing out there. And, with these plays, it reminds me a lot of a trade I did really well on, Peloton. If you remember Peloton, December 2019, they had that kind of controversial commercial. Stock was at like $27. That ignited the move to like 170 because of all the outrage around that commercial. Now, Peloton was helped by COVID, the lockdowns, etc. But December 2019, when that commercial dropped, it was all over the press, all over the mania, and literally started that move. And I think of a lot of it like American Eagle. And then you look at the earnings, very strong. Just a beautiful breakout chart. This was on our radar yesterday afternoon when it broke 18, ran up to 19 this morning. Now pulling back, we got that market weakness, but I just think that this could really match that December 2019 type move in Peloton with American Eagle because, again, Sydney Sweeney's so hot, the company's strong, and I just love these outrage plays that go against the market.
Okay, well, Peloton was hot until it was not. KG, let's talk about this chart. What do you notice about, I'm sorry, Tim, it had to be.
Hey, I actually bought it. I put my money where my mouth is. I bought a Peloton bike and tread in December 2019. I still use it to this day. So.
Okay, your bike. We won't comment on the shares. KG, take us through this chart for American Eagle.
Well, we are seeing a breakout to the upside. Obviously, the stock has seen some pressure over the last year, making lower highs as well as lower lows. But back in around March, we actually did see a decent consolidation for about 3 months, 4 months or so between March and August. And that's when we started seeing a little bit of buying activity taking place. We have this primary downtrend in white here that was being tested. We had the 200-day moving average leading up to the report. And then we had this massive move to the upside here. MACD obviously in a bullish formation. RSI in a bullish formation right now. We have an island candle, so we have to be mindful of that. We did not see any type of major flush going into today. I mean, it's down 3%, but the market is seeing some pressure as well. So what you would like to see for a bull is to be able to hold that $17 level. And if it's able to consolidate at around that $18, $17 level here, you're starting to look at trying to fill some of these other gaps to the upside. And the next resistance area is going to be $20.50 here. So overall, a really decent trend. You did get the breakout. I believe there was 18% short interest going into this report as well. So it's not only just the enthusiasm of the fundamentals, but you also have some mechanical short covering taking place as well. And let's see if some buyers continue to step into this name. This does signify a shift. It's just a matter of how much do we actually pull back, or do we pull back, consolidate, and then continue to push higher here.
Tim, you want to leave us with a final thought before we move on to your next trade?
I love that breakdown. It's funny. Basically, looking at the very similar levels, basically that 17 lower level, I think is a great stop loss area. If this does fail through, I think that would be a great place to move on. And then I was looking for mid 20s for a target price on this trade. So love his breakdown. 100% agree. So.
Okay, Tim, let's talk about your next trade. This is Broadcom. Many say this should be a member of the Mag 7, or we'll call it the Mag 7 Plus. It's making a big move today. It's up 8% right now. It's been a big outperformer year to date. Where do you see this now?
Listen, pretty crazy. They landed, I think, if I don't want to misspeak, like a $10 billion deal this morning. And, that big breakout today. And this is one of those situations where, it's hard to chase those big moves, but you can see how it's pulling back right now. If this could pull back, I don't think it'll get there, but if it could pull back to that previous breakout level, like 318, 320, I think that would be an absolute gift for a buy. Now, that being said, wherever it solidifies today, I think the market's, got a little aggressive on the sell side, but wherever the low is of today, you look for any perk off of that. I think it's just absolute blue sky on AVGO. And again, the chip story, that deal they got, basically the lower the better. And I would just pray for a dip to the previous breakout level. Basically, again, 318, 320. I think that would be you would look back months or years as that post gap up pullback is just an absolute gift for an entry.
Well, to your point, Oppenheimer says it sees Broadcom as second only to NVIDIA as it relates to AI franchise in terms of market leadership. And its thinking is that big $10 billion deal is OpenAI. But KG, what do you notice about the patterns in this chart for Broadcom?
Well, if you're a breakout trader, especially on the intraday price action here, this might be an opportunity. And I could give you a bull case that the stock can continue to move higher here, even though we did see a pretty aggressive reaction to the upside. This stock has usually consolidated, broken out, and then consolidates again. That's what we saw this time last year. It was kind of the end of the breakout this time last year. Saw a consolidation, broke higher on earnings, flagged out here a little bit, tested the 200-day moving average, failed that 20-day moving average. Pretty much the broader market was doing the same. Then we started seeing a really strong uptrend. So if we're taking the highs since pretty much the April 11th lows and that uptrend line here in white, you can actually make the case that we are not sitting at resistance yet. Resistance, if you give it a little bit more time, is probably sitting at around $390 to $395 to the upside here. Now, you don't like to see the failure on an intraday basis, but it is holding the gap, and the gap is actually $318 to around $330. It's not from the close from yesterday all the way to where we opened at today because we actually did have some price action at this level, or at this $318 level back on August 14th. And so let's see if we actually test this gap, or if this gap is going to be an area of support. If not, and we break below, you're looking at 318 as your first area of support, then the 20-day moving average at 303. RSI actually did break this bearish divergence. It was actually in a bearish divergence for a long time. You're talking about 3.5 months or so. We have broken that bearish divergence, which is bullish for the stock. MACD in a bullish formation, 12 EMA above the 26, above the zero line. You can still make the case that there's still room to run for Broadcom here.
Okay, Tim, final thought on Broadcom before we move on to your next trade, your last trade.
Again, I love this guy. Listen, when I was kind of thinking about my levels, he uses a few more indicators than I use. I like to keep it simple, but again, totally agree with that breakdown as well. I like to argue, but I can't find anything to argue about.
That's all right. We don't always have to argue. All right, let's talk about the last one on your list. This one is a head scratcher to me because I can't see what's triggering this. You have Hour Loop on your list. This is like an e-commerce site. You can get different items on there, figurines. I'm seeing a Mario Brothers cup on here, just some random stuff on here. The stock is making a move of more than 100% today. I don't know what the trigger is. What's going on here, Tim?
Well, and thank you for calling me out on that one, because basically, and I have, as they say in the Twitter world, I have receipts, okay? So at 8:48 a.m., the producer asked me to send over my ideas. And at 8:48 a.m., sent over these three stocks. And then funny enough, I thought I was going live at 10 a.m. I actually logged on to Zoom. Producer could probably check that, because what our HOUR is that's what I call a day trade only stock that our day trading algorithm called Oracle kind of maps out entries and exits on. Now, 8:48 a.m. had gapped up big in pre, basically a short squeeze type idea. And then at 10 a.m. when I logged on to Zoom, it was approaching our algorithm's entry of $3.12. And at 10:03 a.m., it hit 312 and went to 540. Now, this is one where I wish I thought I was live at 10 a.m. I wanted to go over this one and literally live, but I was wrong on the air time. So what I'm getting at is this trade, day trade only, it's kind of come and gone. But it is a good example of how you can use these technical breakout areas if you're a day trader. The other two ideas, much more swing trader investment, but our was beautiful, played out, come and gone, move on.
Okay.
So
KG, that's all right. Let's talk about this chart here and the technicals, what you notice about it. Because, I mean, I went on the site. It has the most
He's probably going to hate it. He's going to hate it.
It's so random. Well, the chart. Okay, we'll see. KG, do you hate this chart? I mean, just don't give us your feelings. You don't have to give us your feelings. Tell us what you notice about the chart.
Yeah, I'm glad that Tim gave that disclosure because I was scratching my head as well. And obviously, there's always going to be opportunities in this market. Let's talk about the chart. I'm going to keep this real short and sweet here. This is a stock that doesn't get a lot of attention. It is known for getting squeezes every once in a while. We actually saw that back in December. We did see the stock move up to $6.90 before pulling back very aggressively. We did see a consolidation between April and let's say July or so. Saw some interest getting in. What is interesting, though, that we have to be mindful of from a technical standpoint, not today's candle is not really what you care about. It's yesterday's candle. It's a power candle that's setting up for the breakout to the upside, which is probably another reason why that algorithm did trigger here. And we did see this pop. $4.46 is the area of resistance I would focus on. Point of control, when you're looking at the volume point of control, $2.59. Let's see if some buyers really try to step in. Short interest, if you're looking at retail traders, only sitting at about 2.5%. Dark pool money is around 54%. So there's a large institution that holds significant short in this name. So when you do get some retail traders to buy into it, you could squeeze that one or two institutions that really hold the blocks. This isn't something that's on exchange shorts that are taking place here. So cautious on this name, low volume, very volatile here. Nice little squeeze. Let's see if it's going to be able to hold.
Appreciate the caveats from both of you all on this one because it was a head scratcher to me too. All right, that's our Kevin Green and that's Tim Bohen of StocksToTrade.com. Thank you guys both. Appreciate it.